Rick, in your 2022 predictions, you say a third of American adults are going to own Bitcoin by the end of 2022. That sounds like a big number. Why is there going to be such mass adoption?
Well, we already have it, Bob. We're already at 26% of American adults. I'm simply ratcheting up to 33%. So a lot more people know about it and are investing in it than most realize. It's kind of like teenagers buying beer. They're doing it. They just don't want you to know about it. They're not talking about it.
Matt, talk to us about the right way to look at all this crypto volatility. Rick and I have talked about this for many years. We cover the horse race here at CNBC, meaning we cover the daily price moves of virtually everything. But crypto and other collectibles, as you know, there aren't like stocks. Unlike stocks, Bitcoin doesn't throw off a dividend. It doesn't have a future stream of earnings that you can discount. Like gold and comic books and other collectibles, it just sort of sits there. So what's the right way to look at all this price craziness? Bitcoin as a price, but how do you figure out what its value is?
It's a great question, Bob. I do think it applies differently to crypto assets like Ethereum, which do have some fundamental intrinsic value, and Bitcoin, which is mostly used as digital gold. Look, it comes down to supply and demand, and because the supply of Bitcoin is absolutely known, there will only be 21 million, it comes down to demand. How many people want to hold a digital version of gold? How many people want a apolitical payment rail? How many people want sort of a hedge against the Fed not getting the ease off of quantitative easing exactly right? I think most of the statistics suggest that more and more people are coming into the Bitcoin economy, as Rick mentioned. And so I'm optimistic on what the demand will be long term, but it really is a question of supply and demand, Bob. And right now we're seeing a little bit of a pullback, but still some strong fundamentals underneath.
Yeah, I feel the same way. I'm always agnostic on the price of things. Like people ask me what Bitcoin's worth. I'm agnostic on the price of it. It's worth whatever anyone will pay for it. I collect rock posters. What's a Jimi Hendrix poster worth? It doesn't do anything. It just sits there. It's worth whatever anyone will pay for it at that moment. Rick, you're bucking the trend of almost everybody in the ETF business on Bitcoin. I know you do a little tongue-in-cheek on this, but you do say the SEC will approve a Bitcoin ETF in 2022. Most of the industry think not. Is there a compelling reason to believe why they'll change their mind? And why would they, given that they've turned everything down so far?
Well, the SEC is running out of excuses, quite frankly. The industry is maturing. It's developing processes and systems that are resolving the bulk of the SEC's concerns. And at this point, it's just obstinance on the SEC's part. One of the big concerns that they've raised, that Chairman Gensler has raised, is that they can't control it well enough. Well, they can't control gold or oil either. Those are 24/7 globally traded assets, and they just have to get over it. We need to recognize that people are buying this asset class. And in the absence of an ETF, which is the most popular, most familiar asset structure in the securities marketplace, in the absence of that, Wall Street's ignored, financial advisors are excluded, and that leaves investors to their own devices. And too often, they're getting themselves in trouble because they don't understand how those other assets or products work, because they're not getting the mainstream advice of the financial community. By creating an ETF, the SEC will basically be allowing major Wall Street firms, brokerage firms, financial planning firms, major banks, and insurance companies to engage for the first time ever, and this will go very far toward consumer protection. Eventually, the SEC will say yes, there's no question about it. And it is kind of tongue-in-cheek, as you noted. I've been making this prediction for the last 7 years. I'll one day be right. But we have to ask ourselves a simple question, Bob. How can the SEC say yes to a 3x inverse fund and not say yes to a Bitcoin ETF? Makes no sense.
Well, that's something you and I would agree on for sure. I don't know why the world needs a 3x inverse of anything. But Matt, you're the expert here. You actually have engaged the SEC for many years, and one of the thought leaders in this space. Does Rick have a point here? Like, they don't regulate gold, for example, or oil. But on the other hand, there's not problems with fraud necessarily in gold, and there isn't problems with custodial issues and outright theft going on. Is there a difference here? I mean, Gensler seems to be saying there is.
I don't think there's a material difference, Bob. There's certainly instances of fraud and manipulation in all sorts of commodity markets. I don't think they're materially worse in the Bitcoin market. And so if the same standards are applied to oil, natural gas, gold, silver, et cetera, that have allowed ETFs to launch in those commodities, if those same standards are applied to Bitcoin and other crypto assets, I think crypto will get through. I'm actually aligned with Rick. I'll take one step further than he said. He talked about sort of the realpolitik of it becoming increasingly untenable, of it being a huge investor protection benefit. I'll add, and while I can't speak to Bitwise's filings, the quality of filings around Bitcoin ETFs have improved dramatically over the past year. You know, companies, not just Bitwise, but others, are providing extreme amounts of data to the SEC to help answer their questions. And I think eventually the cumulative weight of evidence will force them to move forward with an approval. And as Rick said, that's going to be great for investors. It's going to be more investor protections, going to be better products. It's going to be dramatically lower prices to access the crypto market that could save people billions of dollars over the long term. So I'm very hopeful we get it this year. I think this may be the year that Rick is finally right.
But you're going to the SEC's point here. They denied it in the last several years because they wanted more data, and they're getting more data. The quality is improving, and so in a sense, the SEC is getting what they want. It's slowly versus having this done 5 years ago. The whole ecosystem is a lot more robust now, isn't it, Matt? I mean, I'm not trying to argue the SEC's point, but they are getting better data now. You have engaged them more, and you have been addressing their concerns and trying to cure, as the legal word is, the defects that they saw in the original filings.
That's absolutely right, Bob. In fact, I would give the SEC credit. You know, the first Bitcoin ETF filing was in 2013 from the Winklevoss twins. I would say at that time, the Bitcoin market was not ready for an ETF. There were no regulated insured custodians. There were massive arbitrage gaps. There was a lot of fake volume and wash trading in the market. There weren't ways to handle broker-dealer issues. There weren't even tax or audit things that were cleared up. We've solved the vast majority of those problems and added more and more data demonstrating that they're solved. We've seen huge regulatory progress on the custodial side. We now have firms like Fidelity that are custodying Bitcoin. Bitcoin has gone from the edges, from the grassroots, from the retail community to an institutional, robust asset that trades 24/7, 365 with very tight spreads and institutional market makers like Jane Street. So you're right, the SEC has gotten what it wanted. The Bitcoin market has gotten better. I would just argue that it's time to get over the hump. It's time to deliver to the American investors the lower cost and better protections and easier access that an ETF can provide. So we're getting there. I think we may get over the hurdle this year.